Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, the 11th of August. I'm starting off the Bowleven, which has been one of the most tricky situations of the recent past amongst the bulletin board heroes. Here we've seen the massive bull trap through 45 pence in June, and subsequent failure really to sustain the 200-day moving average, which is still falling at 37 pence. Once we broke back or failed below 40 pence, the risk was always that there would be a fill of the gap down to 34.5 pence, which finally happened on Friday. The best guess at this point, even though this is very much a mission impossible on the charting front, is that we were in a rising trend channel from February based at 32.5 pence, and hopefully that will limit further losses, even though as we will still have the falling 200-day moving average to pressurize the share price. Moving along in the meantime to Monitise, and here it can be seen we have another stock which has been on the back foot lately. The gap to the downside at the beginning of July, struggled to fill that gap, and then the failure with a gap fill reversal back down towards the sub 40 area. There's a chance that we've seen a rebound off the floor of a falling trend channel from the beginning of April. That was down to 37.5 pence, and a bit of bullish divergence here in the RSI window as well also suggests that this could be a bear trap rebound to chase from below the 40 pence level. It's also a narrow bear trap, of course, below the 38.5 pence low of July. So while we remain above 38.5 pence, chance for a return towards 47 pence. But of course, only really a weekly close back above that figure would really turn the shares around on a likely sustained basis. Next up is Minco, which has been a fascinating chart, if nothing else, in terms of the spikes and the declines that we've seen in recent weeks. Massive spike, obviously, in the beginning of July. But what's interesting here is that August so far has delivered a narrow bear trap from below, or just below the 1.61 pence July floor. That could be significant in terms of a sustainable reversal and a retest of, say, the 200-day moving average at 2.43 pence over the rest of the month. If you're cautious on the stock, you'd maybe wait on an end-of-day close above the 50-day moving average, currently at 1.97 pence as your buy trigger. There's also some bullish divergence in the RSI window to chase. Finally, we have another difficult stock in what has been a selection of difficult stocks today. Fourth time lucky, hopefully, for Xcite Energy in terms of building a base at 60 pence. We've seen this for so long now, since the end of March. The share's trying to find a floor. Particularly evil bull trap through 70 pence at the end of last month. But there is just about a rising trend line in the RSI window running through around the 40 level, which is adding positive momentum here. And it could very well be the case that if we can hold back above the mid-July support at 61.7 pence to start the week, a return to 70 pence, and obviously greater targets after that could be on tap here. So one to watch out for in terms of potential recovery or upside. That's it from me. More updates on spreadbetmagazine.com.